The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, Money Masters and Treasure Hunters. Welcome to the June 24th marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools, well, just simply tools that help you empower human potential, because living up to our potential, that is something that we must master each and every day. So let's begin by taking a look at a tool. This is a tool that I call Man Is What He Believes. Now, those of you not familiar with Anton, he was a Russian physician turned author who's considered to be amongst the greatest writers of short stories. He was born in 1860. So in honor of Anton, let me tell you a story. And this is a story about a woman who dreamed she was being chased by an ugly, terrifying monster. And everywhere she ran, the monster would always be right behind her. In an attempt to get away from that monster, the woman ran into a canyon, and it happened to be a cul-de-sac. She was trapped, and with her back up against the wall, the monster came closer and came closer and came closer until she cried out, "What horrible thing are you going to do to me?" Of course, the monster looked at her and said, "That's up to you, because it's your dream." Question, folks. Have you ever felt like your back was up against the wall? We're going to take a look at a market here that feels like its back is up against the wall, and we're going to see what it is dreaming about. But have you ever felt like your back was up against the wall? Have you felt like you've had a monster chasing you? Let me tell you, just as it was her dream, it's your dream as well, and you have the power to determine how it is that it's going to play out. Each of us, folks, each of us, that means me, that means you, we create monsters from time to time. We view aspects of our lives a little bit different and unique, but we each, every now and then, we see a monster. I want you to slay those monsters and get rid of them. You know, it's so important to remember that our lives are like dreams, and that means that we have control over our thoughts. We can view our lives in any way that we choose. If our thoughts have created a monster, well, we can just simply turn that monster into some type of self-positive image out here. Let's go take a look at the monsters, see if they're turning into princes here in the marketplace. Right now, we've got the Dow trading down 216 points, S&P up 25 points, the composite down 53, Russell 2000 down 16, Google's off 14 bucks, Apple's down 11. Microsoft down 22 ticks, Intel off 37, Cisco down 25, and we're looking at the formation of a potential hammer candle in the 30-minute chart on the ES Mini. Of course, we just started this 30-minute chart as we came into the 10 o'clock session, so we'll see how this will play out here. Now, what I was looking for originally this morning here at about 9 o'clock was a 3 drive to a bottom pattern. That pattern has failed, and now what it's turned into is a butterfly expansion. So just tucked underneath the 1.272 drive to a bottom pattern, just a tad below it was a butterfly pattern, and we'll see if in fact that has played out here as the market, as the ES Mini made its low right around 1556.75. You get a hammer candle there, one candle reversal. We'll see if it can just kind of hang out here for the next let's see, we're 10:10, so 20 minutes, and it forms that hammer candle. We get a little bit of follow through. Then what does that set up? It sets up a bounce in the marketplace, and where's that bounce going to take it to? It's going to take it to about 1578.50. That's right now trading at 1561, and that would give you 1561 to 1578, a nice 16, 17 point bounce inside the marketplace. That's what I expect we will see take place out here, and that's what's going on. Let's take a look at the intraday charts. Now, if you're not short the market, that doesn't mean that you jump in now. It means you wait for that next retracement, because the trend of the market is down. The trend is your friend, and if you haven't had a chance to go download free special report that I put together for you, please do so. It's on the homepage of TFNN.com. You'll see it underneath breaking news. You'll see it on the left hand, what we call a carousel, but really you'll take a look. You'll see an up arrow and a down arrow. Download it. It takes all but about 30 seconds for you to download that special report. A lot of great information contained in there. I promise it'll help you to be able to trade these markets. If you're just learning about technical analysis, then it's a place where you want to start. You want to make sure that you can identify the trend, because it is your friend, and you want to make sure that you're trading in the direction direction of the trend. Now, you can play counter trend moves. They are dangerous when you are going against the trend out there. So you better know what it is that you're looking for. And I'm not saying what we're here just yet. I'm saying that in this case here, I know what patterns that I'm looking for, but I'm also waiting for the signal to give us the best reward to risk trade out there. We don't get a signal. It says that the market wants to continue its trend lower. And that's very important. And it's very important because this 3 drive to a bottom pattern that was forming inside the ES mini out here, as it was also making a larger pattern on the daily chart. When that fails, it says the trend, which is your friend, is really got momentum, which would be to the downside if, in fact, this pattern here. Now, this pattern went to one next level down, and as you are on any elevator out there, you just need to understand where those levels are. That's why it's helpful to understand your expansions and contractions of swing points. In this case here, we're looking at expansions. During the first hour, we were really talking about contractions for the most part, not the kind when you're pregnant out there, but the contractions that you see between price levels. Now, with regard to expansions, the expansions you want to be paying attention to, 1.272, 1.618, and then you've got the 2.618 as well out here. Right now, if we take a look at our most recent set of swing points on the ES Mini 30-minute chart, that would be down at the low from 12 o'clock in the afternoon on June 21st out there. That price level is 15.7050. Your high that came in, your high coming in here at the price level of 2:30 in the afternoon on Friday as well, that was 15.85. If you took those two, you took the difference, you multiplied it times 1.618 and subtracted it from the top. That is the low that we've seen that was put in so far this morning, down at a price level of about 1567, and we'll just simply round it off, 1556 out there, 1557. That's what's going on the intraday charts. Now let's go over, let's take a look at the indexes here. I almost feel like a little bit of a weatherman when I say that stuff. And in fact, we got a green screen. So I guess you could say I'm a version of a weatherman. I'm giving you a weather forecast of the market and of the charts. Let's start off here with the Dow. Right now, this is trading down about 224 points. It has sliced right through the 1 to 1A to B equals CD, but we knew that that really was not going to necessarily hold. Let's take a look at our swing points here. Let's take a look at our retracement levels, I should say. That would be coming from your April 18th low, April 19th low in this case, down at the 14,444, all the way up to the high that was put in, and the 0.786 level, you can see it's really down below that. So, in fact, the Dow may want to go ahead and push forward and complete its 100% move of a move. It's into that swing point right now, or very close to it. The top of that swing point was 14,454. That's not going to change. And in trading this morning, we saw the Dow get down to a low so far of 14,451. So it has tagged that area. It closes inside that, then it will go ahead and complete that move to the downside. This is a vicious market to the downside. Did not take very long to get all the way back down. So if you want to understand where we are trading at right now, we are trading into March 28th of 2013. So in basically what we're taking a look at, going from last Wednesday through this morning, we have taken back price that has taken you all the way, well, really, if I go all the way back over here, it's really taking you March 14th, though I didn't say that. That is the, now where is the, you might ask me the question, hey Steve, where's the Dow headed? If I were you, I would want to know that. I can tell you exactly where at least a minimum target range is that it is headed to. If you give me a moment here, I'll actually give that number to you. Just looking, let me pull up this right here and change this exponential moving average to this one. There we go. Now, your minimum target to the downside, and I do say minimum target to the downside, is going to be the price level of 13,691. 13,691 is, 13,691. So you're trading right now at 14,577. So for those of you that are trying to make some shorter-term, longer-term decisions, the type of pain that you should expect to experience. Now, I am just simply basing my decisions based on historical information, and we're going to use it from the year 2000 forward. So we're going from the year 2000 through today, 2013, and that says the minimum price objective on this 6-month unfavorable seasonal cycle, and that's what we're in. The sell in May, the interesting thing here is that a lot of times people think sell in May means sell May 1st. No, it means sell during a 6-month period of time. You're waiting for price targets to finish either to the upside. Oftentimes it does start on May 1st, but in this case here, it most certainly didn't. When it started was on May 22nd, when we saw that key reversal in the marketplace. Now that we know we're in that unfavorable seasonal cycle, we know that prices are moving to the downside. We can see how fear actually moves. It says the minimum target, because if you take a look at at the last 13 years, 12 years, I should say, out there, your minimum price movement means it's always gone down and it's at least touched that 12 period, the 200 period exponential moving average. In this case here, your price number is 13,691. That doesn't mean that's where it has to stop, but you've got to make a decision right now, in my opinion, with regard to your investments in the market. If you were heavily invested in Dow stocks, do you want to take that ride down? And if you do, that's okay. Just know that that is the minimum target out there that we are looking for inside the Dow Jones. Let's go take a look at the other indexes. We'll do all the indexes, then we'll go take a look at the actual ETF structure out here. New York Stock Exchange, although no index to trade, no ETF to trade off of it, it is the best indicator of the overall breadth of the marketplace out here. As we take a look at that, you've got the 1-to-1 A to B equals CD down that now has completed inside the New York Stock Exchange. We're trading out right now at about 86, looks like about 88.53, and that has the 88.51 was really the completion of your 1-to-1 A to B equals CD down. But what you can really see here is you can see that price again on that C to D leg, very powerful. Now, if I pull the New York Stock Exchange back, it very well may be that the first bounce that we see inside this market is when the NYSE gets down to the bottom of its price channel here. The bottom of its price channel, what it is doing right now today is as it gets below its April 18th swing point. Again, we were taking a look at April 18th, April 19th swing point inside the Dow. You'll see that's what we'll look at inside the S&P 500. But what's real key here, I'll go ahead and blow this up on the screen for you. The April 18th low inside the New York Stock Exchange is 88.90. We're trading below that right now. So the NYSE, the larger breadth of the market, the real pulse of what's going on inside the basket of all the stocks out here, the health of the market is telling you that we're really, we don't, this is not a cold, folks. This is a flu. And this is a flu here. You're now down below those areas, and it's been able to take back, let's see, it's gotten back to that April level here in a very quick short order. In fact, right now, if we take a look at the NYSE and go all the way over to the left, it's trading into January. So the NYSE has basically gone from highs in May all the way back down into the January time frame. January 21st is where it appears to be trading right now. That's how quickly your money can be taken back from you. It's why you want to make sure that you've got stops in place. Now, as I pull this back here, you can take a look at this rising price channel. This rising price channel is coming off of the October 2011 lows out here. This area has acted as pretty good support. I suspect that we'll see the same thing take place, where we will see a bounce in the marketplace. That means that the New York Stock Exchange will, in order to get down there, has to perform a 1 to 1.272 A to B equals CD, or a bit lower than that, and that'll take you into the 8,700-ish range out there. That's your minimum expectation. It may be that that's what we see take place here before we see any kind of market bounce or market correction. 877-927-6648. We get back, we'll go take a look at the S&P 500, the Russell 2000. I can give you the numbers on that as far as where the market will move down to at a minimum during this 6-month unfavorable seasonal cycle. We'll be right back, folks.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Right now, we've got the Dow is off 226 points, trading at 14,573. S&P down 27 points at 1565. NASDAQ is off 52 points. The leader to the downside is the Russell 2000. So let's go switch over to the Russell 2000 index. It is trading off right now about $16.50 off 1 7/10%. So let's go take a look at the Russell. We'll switch over to the index. We'll take a look at what it is doing, what we need to be paying attention to, and where it is its likely first target here, or its target during the unseasonal, during the unfavorable seasonal cycle that we're in here. Now, what we can see here about the Russell 2000 that's going to be important to pay attention to is, let's take a look at this rising price channel. This was the rising price channel coming off of the November 16th lows. It now has taken that out here this morning. It's taken it out with conviction. Well, I assume it's with, let me pull this back up to the top. We'll go take a look at the volume inside the marketplace out here. So the Russell now breaking a price channel. That means that you could see, if we do see a bounce, if we do see a small bounce out here, the Russell would try to get back inside the price channel, and as it would get up to that level, that's where I would be looking to go ahead and consider adding a short position inside the Russell 2000. Now, Let me do this here. Let me find the moving averages. I just need to adjust it from the 9 and 18, which, by the way, the 9 has crossed through the 18. That is a great trending tool as well. It's another trending tool out there, and that has switched to bearish. If we go and we take a look at the 200-day out here right now, we're going to use the 200-day because that's really... Now, I haven't done the study of the unfavorable seasonal cycle inside the Russell 2000. I have on the Dow and the S&P 500 because of all the data that I do have. But it should be about the same, and that means here, because the markets are going to work in harmony. So right now, the first target for the target during this cycle for the Russell 2000 is 871. It's trading right now at 946 out here. So that's quite a hit. From 946 to 871, you're looking at another 50, 65, 70 points, something like that. That's just the minimum target. Doesn't mean it has to stop there. It means that it should at least get to that level. That'll take it all the way back. In this case here, inside the Russell, that'll take you all the way back. Really, it'll take you just above the January 2nd high out there inside the Russell 2000, and that's where she is headed to. So the Russell has broken its trend channel. Now, it's a shorter-term trend channel, but it's an important one because it's a trend channel that marked the bull leg of the run up from November 16th to the May high that was put in on May 22nd out there. Let's go take a look at the NDX 100. Let's go see what that is doing. Getting some real pressure here this morning because of Apple, Google, Wynn Resorts to the downside, and now Priceline has joined in on the action. Priceline is off $18.60. MasterCard may be in on the NDX as well. That's trading down $11. Amazon down $6. So the NDX 100 has a lot of friends. Unfortunately, they are to the downside at the moment. So let's go take a look at the NDX as soon as I can find it here on my screen. There we go. Let's take a look at the NDX 100. You can see that the NDX has now broken through the 0.618 retracement. It had really set up a nice potential bounce here this morning because what it had done, folks, it made a 0.618 Gartley buy pattern. That Gartley buy pattern has failed. That says the next area is 0.786. Now, when I talk about failing, we're taking a look at coming off of the April 18th low out here. Inside the NDX, that's 2730 and a little bit of change. That low all the way up to the high that was put in here on May 22nd out at 3,053. From the low to the high, the 0.618 level, that's what we saw it hit on Friday. In fact, it almost hit it perfectly. The low on Friday was 28.53, and the number was 28.54 as far as the 0.618 level. So that is a beautiful thing. The unfortunate thing, the beautiful thing here failed, and now what we can see Fibonacci-wise is that price should now move down to the 0.786 level. So let's go measure what that is, see how much further the NDX may have to roam to the downside. You can also see starting to get into the oversold territory. It says 27.99-ish is the 0.786 retracement. The problem is that if it actually does move down there, as long as it gets down to 27.99, it'll be so close to the swing point from April 18th that it might as well just go hit it, because the top of that swing point is 27.8819 out there. And that's on the NDX 100. As far as where is the NDX 100, you can see here, if you're looking at if you're watching us on Tiger TV, thanks so much for doing that. You can see the 9 and 18-day exponential moving average. We can see we had a nice cross through on that on June 19th out here. As I pull this stock chart back, you can see that coming off of the lows back here in November, they come all the way back here. We saw a couple of crossovers, but nothing as steep as this. There are troubles in River City, folks. 877-927-6648. Dow's off 222. We'll be right back.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, and one of my wingman, David White, Polar in the Tiger Den. He, we were talking about trouble in River City. Well, he put in those words. So trouble. Oh, we got trouble right here in River City with a capital T, which rhymes with P, which stands for plunging to the downside. Of course, he put which stands for pool. We surely do have trouble inside these markets. Right now, the Dow is up 231. We're going to take a look at the S&P 500. I'm going to first go back because we do have that 10:30 session here that formed as we were making a 1.618 expansion of a set of swing points, a little butterfly pattern that was setting up. And important to note, no bullish candle out here in the marketplace, so no bullish reversal sign. And as I take a look at this 30-minute chart here, trying to play any counter trend moves is really a delicate thing. Got to make sure that you absolutely would have stops in place out there. What I'm noticing here, that I've got the four exponential moving averages that I like to use from a trending standpoint. That's the 8-day, the 21, the 50, and the 200 out here. And as we take a look at that, what I do notice is that price has not been able to move above the 50-day exponential moving average out here. And originally I was looking for maybe a bounce into 1570. Not so fast for sure, as my good friend Lee Corso would say out there. Right now, maybe the maximum bounce that you could expect out here would be up to the 50-day exponential moving average. Right now, it looks like that's at about 15, where is it out here? 8, 21, 50. It looks like about 1576 or so, because that has really been the plunge point to dive back into the short side. So I'm not saying that's going to take place. In fact, you know, in this market here right now, I think you're better off just waiting patiently to get onto the short side if you're not there. I don't think you need to, but I don't think you need to jump onto the short side. And if you're not there, just be patient and try to play some kind of bounce out there. In any event, let's go take a look. I said we'd look at the S&P. First, it was important to take a look at the EKG of the S&P, the futures contract, the 30-minute. Now we're going to go and take a look at the actual daily chart for the S&P 500. And what's important there is right now the S&P 500 is printing out a price of 1565. And what does that mean, folks? Yes, for those of you who remembered, because you heard us talking about 1576.09 for so long, which was the breakout of the October 11, 2007 area, guess what? The S&P 500 is now inside that swing point. What does that mean? It means it was a false break topside. Now, it was a false break topside big time, because from a volume standpoint, we'll take a look at the SPYs itself, but number one, the S&P 500 is traveling inside that swing point. The low of the swing point, by the way, is 1546.72. So 1546.72, write that down on a pad of paper. 1576.09. You also want to be taking a look at that, because we have seen a false break to the upside inside the S&P 500. Now, the S&P 500, you say, Steve, where is this going to go to at a minimum during this unfavorable seasonal cycle? Well, at a minimum, the number, we've been painting this for you really since May 1st out there, giving you the target out there. That's going to be a level of 1471. So 1471, it's at 1565. It's basically another 100 points due south from here. And you have to determine if you have got funds that are tied inside your 401k or what have you, that they are pegged to the S&P 500. All that I can tell you, can I guarantee you anything? I can guarantee you that I'll give you my what history has proven. I can't control the markets, but I can control decisions out here, and you have to decide whether or not you think, based on what you've seen so far, based on the angle of that C to D move that we have seen here, whether you think the chances, the probability of being able to move in, breaking back inside the October 2011 swing point, back into the lower side of the range. When you clear 1546.72, that will be proof of that. But you're looking at least, like I said, at least another 100 points down. That's assuming that this year that we're in, 2013, trades similar to the last 3 years. The last 12 years since 2000 out there. Actually, it goes back further than that, but at least we'll just simply take a look at the last 12 years out here. So that's how I'm really coming up with that number inside the S&P 500. Now let's go take a look at the SPY. Let's take a look at the ETF structure. And what we saw take place on Friday is that we saw volume, big volume here on Friday, followed up by bigger volume on Thursday. On Friday, we saw 271 million shares on the SPYs coming back into the October 11, 2007 swing point that only had 233 million shares. Now, we never saw 233 million shares as that swing point was passed all the way up to May 21st. On May 21st, the key reversal session, that being the key reversal session, so volume there at the highs, but certainly volume off of the high at the same time, and that high has now been tested. That was 243 million shares to the downside. So that was the only time we saw anywhere near that type of volume, which was taking out the October 11, 2007 swing point. Right now we can see the 0.786 Gartley buy pattern has formed. It has moved just a tad below that level, and that's the Gartley buy pattern coming off of the swing point from April the 18th out there. What you can see here is price on the, well, I'm not going to, I'd have to switch to a different RSI. I can do that here. Let me see whether we're overbought or oversold. Give me a moment here to find that. There we go. Add that. I needed to add that to a different spot inside the chart. So if you're patient with me, and I appreciate that, give me a moment here to do that. Let me change this to maybe window 1 out there. There we go. So if we take a look at the relative strength index, it's close to being oversold. It's at a level of about 34, so it needs to get down to about really 30. It could move a little bit lower before we start to. Now, it has not been down to these levels here. In fact, until the last time that the RSI indicator was down at those levels was back in November 16, 2012. But it looks like it has a little bit of room still to run to the downside out here. Now, on that 30-minute chart, it didn't give us that bullish candle earlier. Now, so if you're asking where's the SPY headed to, let me go ahead and give you that number. The minimum target for the SPY out here would be a price level of 147.17. Oh, I have it right here on the screen. I didn't have to look it up. 147.17. It's trading right now at 156 and a little bit of a change out there, and that is on the SPY. If we go back and take a look at the fight between the bulls and the bears, our next 30-minute cycle, unfortunately, doesn't complete until Basel comes on the air, but we'll take a look at it just before we go off the air here. We'll go back and take a look at the EKG, take a look at that 30-minute chart out here, and thus far what we can now see the bulls here trying to rush in at that 1.618. Well, it's really a 2.0 butterfly with a 1.618 expansion. To me, it's really not a 3-drive to a bottom pattern, but we do have a little bullish engulfing candle. So the bulls are going to try to give it a run here. At least they have been during the last 11 minutes of trading. That is on your ES Mini. We haven't talked about the commodities here, so let's go do that as we've seen the push lower in the marketplace. Let me just switch over to another area. So we've got gold is trading off $7 out of 12.84. It's on its way to 12.20, maybe 11.55 as we took a look at the longer-term chart, the monthly chart, the weekly chart inside gold, and measured from, I think it was maybe 2002 lows all the way up to the highs that were put in. You've got silver down 31 pennies. That's off 1 6/10%. That's trading at 1964. It wants to trade down to $17, where it has a nice potential nice Gartley buy pattern on the weekly chart. Light sweet crude here actually showing a bit of strength, only down 16 pennies here. Of course, if we take a look at light sweet crude, let's go see what it is doing, and we'll take a look at the other charts as well. But as we look at light sweet crude out here, that's why is that I'm in the currency section. That's why it shows a currency trade out here. Let me go take a look at light sweet crude. I'll click on the right button. And what we've got here is we've got light sweet crude is now broken back inside that long-term descending. How do I do this here? Give me a second to refresh my screen. Alt 7, there we go. And what we can see, I'm going to blow this up. So here, what you're looking at on the screen here is we're coming off of the highs back here when light sweet crude was trading up to 146. So that was back in July of 2008. Now, as we take a look at the trend line coming off of that area, the channel line, I should say, what we can see is price broke out above that channel. It did it here the week of June 14th. Last week, broke back inside it. And when you do break back inside a channel, it says you can't go all the way back down to the bottom. That has not, at this stage here, you got to pay close attention to this price channel, in my opinion. So you've broke back inside it. We're not seeing a lot of conviction today, especially with King Dollar being up 29 ticks right now. If we go take a look at a shorter term time frame, that's what we're going to do. We're going to take a look at the daily chart on light sweet crude. Where is it? That's the end contract. I don't want that. Let's just take a look at the continuous contract out here. Let me put this on a daily time frame versus a, oh boy, what did I do there? I must have something else that I was looking at. I'm going to skip, well, I can do it. Maybe I can freak out my system here. Let's see, daily. I'm not going to be able to do that. Let me put this on a weekly time frame. Let's see what we've got going. That was a weekly. Okay, we're going to skip light sweet crude for now. My apologies about that. Let's go take a look here at gold and silver. Let's take a look at silver first. Silver, again, trading down 33 cents right now. And silver has broken through this little shorter term. This is a weekly chart that we're looking at. And it has broken through that little Gartley butterfly buy at the 1.618 level, the swing point low for May 24th out there. Again, very small-bodied candles. The Japanese proverb, if you will, is when you see a little doji candle and you've got price that closes below it, it says that the leaves are falling off of the tree. So it looks like we're still in the autumn time period here. Maybe it's winter as it gets a little bit cold in silver because it wants to move down and form this larger Gartley buy pattern, which will take you into about 1730. 1730, 1740, somewhere right around that area. If we take a look at gold, we take a look at the consolidation, that it broke through. That gives you at least a projection from a consolidation level to the 1270 level, your 1284. So far it has traded down to a level of 1275. So to a certain extent, you could see a little bit of a bounce here, maybe a move sideways. 1227 is your October 3rd, 2009 swing point. 1156, that's more likely where gold is headed to. That will be your 1 to 1.618. A to B equals CD down. And what it will also do is it will, on the longer term chart, on a weekly chart, it'll end up also being a Gartley buy pattern. So that looks to me like where we're looking for gold to trade down to, end up to about the 1150-ish range out there. Let's see, a question in the den. Can I look at the dollar? We can take a look at the U.S. dollar index. Of course, that is a basket of currencies, the euro being the heaviest weighting, and then the pound and the Japanese yen. If we take a look at the U.S. dollar index right now, I've got about a 10-minute delay on this, so I don't have to pay the $90 for the live feed. U.S. dollar index is printing out at 82.79-ish, I'll say, because on my chart it's at 82.78. It has broken back into the rising price channel. The rising price channel coming off of the lows back in How about that? Back in 2011 out there, what I believe that the U.S. dollar index wants to do, it's going to first have to break back above old resistance. That is a strong resistance level. That resistance level is going to be $83.64. Once the U.S. dollar index breaks above that, then what we will see is we'll see it move all the way up to the I would say the 85 to 87 level, where it will go ahead and form a butterfly pattern. That's what the U.S. dollar index wants to do. 85.79, that'll put some pressure on gold and silver and light sweet crude, or it should, as well as if it moves up to 87, 86, which will be the completion of a 100% move of a move, getting back to the June 2010 time frame. The top of that swing point is actually 89.10. So that's on your U.S. dollar index. More importantly is the queen out here, and the euro, she wants lower price out here. The queen here, you can see the C to D move. It's moving to the downside. It's on the inside leg that says it's got volume. It's got energy to the downside. That'll take it really, in my opinion, it's going to move all the way down to about the 124-ish level out there. We haven't taken a look here at any of the sectors within inside the S&P 500. So why don't we do that here while we've got this, before we go off the in this next segment here where we've got 2 minutes. Let's take a look here at the energy sector. So the energy sector, let me move this over because it's still in a confirmed downtrend. Right now, the daily chart, the energy sector, the only thing holding it in place here, and it's traveling at the 76.40 is what it is printing out right now. Give me a moment here. I want to pull something else up. Oh, I don't have it there. Son of gun. The energy sector is traveling right down the 200-period exponential moving average. But you can take a look at this C to D leg. This is really cascading to the downside big time. The XLE, the energy sector, had set up really beautiful sell patterns. Long-term A to B equals CD. That A to B equals CD coming off of the 2011 lows out here. That was the October 2011 low. So it completed that pattern and completed two butterfly sell patterns. Now what we're seeing is the today, the 1 to 1.272 area, 75.75. That in essence has completed. It's been down to a low of 76.08, so close enough, or very close to that. But the XLE has got much further to run to the downside. It is getting into the oversold territory, so we could see a bounce here, but it has got further to the downside, and quite frankly, it could be setting up a larger A to B equals CD move. So the energy sector, volume-wise, last week on Friday, you had 11 million shares. That was taking out the B point that had 18 million. Well, really, the B point was taken out with volume. That was on June 20th out there. 25 million shares took out the B point that had 18 million shares. Right now, we've got the Dow is trading off a total of 171 points. S&P's down 22. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% advantage plus. The plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 174, S&P down 22. As we take a look at the intraday chart, truly intraday chart, the 10-minute chart on the ES Mini, we can see the bulls truly trying to mount a little bit of a charge here, or at least defend a position. And where's that position that they're defending? Well, we had a little hammer candle that formed as we came into the 10:10 a.m. session. That low there, 1556.75. That's your line in the sand. If you were trying to play a counter trend move, do not let a close on on a 10-minute chart get below that level, because when you close below a hammer candle, it says you are headed further south. Now, what we can also see that took place in the bullish side here is we saw a little bullish engulfing candle that took place at 10:20 as well. So that would say on a bullish engulfing candle that the low of the prior session that it engulfed, that would be support. Well, we know that's our hammer candle. Of course, that bullish engulfing candle, that was erased during that following session as we saw it move lower, but then the bulls stepped right back in with another bullish engulfing right here, and that was the trading session from 10:40. That would say, okay, the low that you'd be looking at there, which is your new support line, is 1556, even Steven out there. So you know you've got this hammer support. The hammer was tested. Let me draw a line across the bottom of the screen out here, and we'll take a look at the volumes as well. So we can see that hammer support was tested. It held, and you had a nice bullish engulfing candle as well. The volume on that hammer candle was 107,000 contracts. You came down and tested it with 70,000, and then that bullish engulfing candle, 74,000. So the low of that was tested. So it's a nice test of a swing point low out there as well. So that is the area in the sand that has been drawn. Now the question becomes, where is the potential target? On the 10-minute chart, your target is going to be your most recent swing point if it could really get back up there, which is going to be that 50-day line, 50-period line, I should say, exponential moving average. And on the ES mini on the 10-minute chart, that gives you a price range of about, looks like about 1569, and you can see the swing point that it would be traveling into the low of its 1571 from 9 o'clock this morning out here. So that initial range would be anywhere from 1571, 1569, all the way up to a high of about 1575. But we can see what the bulls and the bears are doing. If I switch back over to the 30-minute chart, the 30-minute chart also shows shows us that you've got a bullish engulfing candle. You've got 4 minutes left for this candle here to form, but this is a market where playing the counter trend rallies is a tough thing to do. So just make sure that if you are, watch this, because you could find as your pilot out here, you'll find big turbulence at 1570. 50 out here in the marketplace. The ES trading right now at about 1564. Let's go check in on Google, see what Google is doing out here. Google is to the downside. I just want to see, because it has a hammer candle, I believe, as well, talking about hammer candles. So let's go check on Google, because I believe it's trading down into it, or at least it was earlier today. Google, here we go. And that hammer candle, that should be some good support inside Google. I wanted to see what the volume was on this hammer candle. So Google here formed a hammer candle on June the 6th. The top of that was 866.33. So far today, it's been down to 864.56. 860, yeah. So it's been inside it. Now the volume of that session is 2.5 million shares, and today so far you've traded 989,000 shares. It's coming back into that volume area. Check for a good support here on Google to be the low, 847.22. If you test that area on light volume, 2.5 million shares, maybe that sets up a buy. But going long any equities in this marketplace until the correction is over is a risky thing to do. Folks, stay tuned. Basil Chapman is up next. It is Marvelous Monday. That means following Basil, we've got Larry Pesavento, David. Then we've got Daryl Martin, David White, and the Tom O'Brien Show from 4 to 6. Remember, folks, the way you do anything is the way you do everything. Be a pioneer of your future. Do not be a prisoner of your past. Take care, folks, and have a great Monday.